If you want to be a good trader, you have to understand support and resistance. Support and resistance comes in many forms. It could either be due to previous rejection of a certain price, like we see here at $50. It continuously rejects it and bounces off of it, and that's what we call resistance. So we could essentially, sorry about that. We'll get into that in a minute. With this, we can essentially put a line right here because as you see, it continuously hits and bounces down, meaning that is resistance because it's constantly rejecting. And then you also have support. And support is the same thing, just it's where it continuously bounces at the same spot. So as we see here, we continuously get bounces off of our support line. 1, 2, 3, almost 4. So support is where it's supporting. It's like a steel beam that will not allow the stock and the candlestick to go through. To where again, the resistance is where it continuously rejects off of it until it either breaks through the support or resistance. Eventually, something's going to give where it breaks through support or resistance. And in this case, NVIDIA broke through resistance and went higher. So, price action on your candlesticks, and this can be done on your daily, weekly, monthly, 4 hour, 15-minute. You could do this anywhere. Just always know that the higher the time frame, the more, or the higher the time frame, the higher the probability, meaning that it's much more likely that the re- the resistance is stronger and the support is stronger the higher the time frame. So monthly, daily, 4 hour, 1 hour, 30-minute, 15-minute, 5 minute, 1 minute. So you can't you can't be like, oh, well, this 1 minute keeps hitting the same support area, but you're thinking of a long-term trade. You need to go up to 1 week or daily at least, because it's just silly to be doing that. Um, Other resistance points can be moving averages or actually just rounded numbers. So let's just get in the let's do one by one. Moving averages. So this is your purple line is your 25-day moving average. Your yellow line is your 50-day moving average. Your green line is your 100-day moving average, and your yellow line is your 200-day moving average. It just is taking the average price over 200 days, 100 days, 50 days, 25 days. That's it. And with these, basically, if you're in an uptrend, you want them all to be going up. You want the 50, that you want the 25 up top, then the 50, then the 100, then the 200 in that order. And if price is above all of those, it's extremely bullish for the stock in the company, like Nvidia. Like we had this massive move from 2023 till now. Now, the thing with the support and resistance is that before this stuff breaks out, these can be resistance. So if you were heading southbound, if you're heading downward, then once you break through these and you come back and you hit them, so you break through, you come back and you reject. Then you bounce off of the 50-day, bounce up to the 25-day, reject. Break through the 50-day, bounce down to the 100-day, fall down to the 100-day, bounce a little bit, then break through it, then retest the 100-day, reject off the 100-day, fall down, retest the 100-day, reject off of it again, have a little bounce off the 200-day, break through the 200-day, and then finally the stock says, "No, you know what? It's time to turn around." Then it goes up, breaks through it, comes back, retests it, breaks through the 50-day or the 25-day, the 50-day, then the 100-day, and then we continue higher. So essentially, you can think of these moving averages, and we'll get into these a little later, but you can think of them as potential rejection or support areas. So obviously, yeah, they're also support and resistance, just in their own way. And then another, besides historical data, just based off of, like I talked about, where we've bounced before. So if Nvidia were to fall all the way down here, sorry, if Nvidia was going to fall all the way down here, well, then right here you have pretty good support now. Because another thing about support and resistance is as you create support and resistance, as you continue sideways, bouncing off support, rejecting off resistance, essentially what's going to happen is once you finally break over resistance, that is now support. And typically it didn't happen here, but typically what happens is you break over resistance, you break over it, you come back, you retest that resistance, and then you continue higher, turning, I call it flipping this resistance into support. And it's the same thing um on the when you're going lower. So if we were to break out to the downside, then this support now becomes resistance after we retest and then continue lower. So, either way you look at it, resistance when it breaks, when you break resistance to the up, when you break over resistance, that now typically you get a retest, sometimes not, but that becomes support. It's flipped to support, and then same thing with your support. If your support breaks, now it becomes resistance. So it's just flipping it. Um, Besides that, rounded numbers like 50, where we saw it rejecting, $50, $100, depending on what the stock is, right? So, Nvidia, you know, $100, 90, like, any really round numbers. So I would say for this, like, we're really talking about 80, 90, 100, 110, 120, 130, 140, 150, just rounded off numbers in the tens as we go up, just because it's Nvidia. Uh, um, it's a almost $3.5 trillion company. I mean, it's just massive. So yeah. So back to just normal support and resistance, because this price action support and resistance is your main type of support and resistance. Then I would probably say your moving averages are number two. And then number three would probably be trend lines, which trend lines are just, if you're in an uptrend, just draw a channel and like that. So, you know, this is your support. This is your support at the bottom of the trend line. The more times you hit it, the stronger the support. This is your resistance. So we only hit it once, but basically once we get back up here, say to like 170, 180, then you're going to see some resistance in here, shoot, like hitting the stock back down, because that's what this trend line is telling us. Um, but yeah, the most important one is your support and resistance. Basically, the stronger support and resistance is made by a stock hitting an area a multitude of times. And last thing about moving averages, if your stock is above all moving averages, obviously that's very bullish. If it's below all moving averages, that's bearish. So let's just move in here. We're on the weekly here. So I would sit here and say, if I were going to just put some major support and resistance areas, I would probably say this line right here, and let's see, that area right there. So as you can see, so 91, 94, so 92-ish, we came up, we rejected off of it, we came up, we wicked off of it. So we rejected, broke through, broke back down, wicked off of this trend line, or wicked off of this resistance, 1, 2, 3, 4, and then finally broke through on the fifth time. breaking through. But what did I say usually happens? We typically come back to retest said resistance to flip it into support. So now that we, resisted this $92, then came back and retested it, bounced and continued higher. If we did fall down here to $92, that'd be very strong support in my eyes. When we ran up here, we rejected once, fell down, almost rejected twice, rejected a third time, finally broke through, but then came back through, then broke through, then came back to retest it. And then we just kind of been sitting here. So this actual 140-ish area is still pretty starch resistance in my eyes. Fake false breakout, just continuously on this right in this 140-ish, almost 141-ish after basically false breaking out of it and not being able to create it, not being able to flip it into support. When we do break out of it though, and we come back and actually really retest it and then move higher, you you better bet this 140-ish is going to be very, very strong support because of how long it's been in this area and then creating this consolidation here, which basically means you just have a lot of buyers and sellers in this area, which tells you that if it came back to this area, you're going to have that again. So, anything else? Let's see. That's it, because I'm not going to get into patterns, charting patterns, and everything like that. So, yeah, that's support and resistance. It's very important to draw it on your charts to know where it's at, because whenever you want to know where these strong support areas, where the strong resistance areas are, because you don't want to try to be buying into a stock right here at resistance. You don't want to be selling short a stock right here at support. You want to be getting out of trades if you're shorting around support and then getting out of trades to the long side um, at resistance spots. So it's very important that you know support and resistance. And like I said, this is number one. These price action um, lines, basically where the candlesticks are, highs and lows, and the more times it touches, the more the stronger the support or resistance is. Then I would say your moving averages. Then I would say um, your trend lines, and then rounded numbers probably. Finally, I didn't touch on it, but it's very important. Basically, when you are moving up and uptrending, when you're uptrending or downtrending in a stock, every time you need these pullbacks right here, because what happens with these pullbacks is essentially the stock is creating support. When you have pullbacks, you are creating support. They're like M formations, right? So you just run up and keep pulling back. And essentially, in a perfect world, every time you had resistance and you made a high and then you broke through it and you came back, you would retest it. Have a high, break out, come back, retest it. Have a high, break out, come back, retest it. And that's essentially what higher lows. That's what we call higher lows. Higher lows just meaning you run up, you pull back, but not as low. Obvious. And sorry, you run up, you pull back, then you run up again and you pull back again, but now it's a higher low than the last low. This is the last low. This is the next low. This is the next low. This is the next low. And those are all higher than the last low. So higher lows because you're still in an uptrend. Now, lower highs is where you are having, um, sorry, these are W's, not freaking M's. My bad. W formations because they just make W's, W's, W's. And then you have M formations, which are lower highs. So let's say, let's just pull it up right here. You can already see it, can't you? And you could practice this, guys. Just practice this on your own charts. So we topped out and then we came down had a lower, lower high than the last high. And then we came down some more. And then we had another lower high than the last high. Then we fell some more. And then we snapped back. These are creating resistance. The other ones are creating support. These are creating resistance areas. And then we had another lower high than the last one. And then we fall down again. And then we rise, fall, rise. And now what? We have a lower or higher low than the last one. And then obviously we continue onward and upward to where we continuously have higher lows. And now we're in an uptrend, not in a downtrend anymore. So I hope that all makes sense. I hope this video helped you out with support and resistance and all the different types of support and resistance. Appreciate you tuning in, and I'll catch you in the next one.